Hi, I'm Mark Bouris, and welcome to the Broker Room. And this show, really important, is about stepping up your game in the mortgage industry. And we've got two legends, as far as I'm concerned, sitting here in the room today, both ex-Westpac St George. We've got Dion Villiers and Mel Falanga. They currently run, or they own, one of the franchise dealerships for Yellow Brick Road in Leppington, and they own another one in partnership with their other partner, who's not here. She's not here today, but that's at Edmondson Park, and that's only recently opened, or relatively speaking, recently owned. And I want to talk to you guys about, not only stepping up your game in the mortgage industry, but what it's like to leave an institution like Westpac St George and become your own boss and run your own business, have your own back book, and add value to customers' lives for real. So who wants to kick it off?
Yeah, look, it was pretty daunting, Mark. I've got to tell you, 30 years at Westpac, and you get to the point where your role's redundant, and you got to think about what I'm going to do. And I sat back and I looked at what I do, and if you're a tradie, you've got a trade to go to. You can start your own business. And I thought, what's my trade? And I thought, well, mortgages is my trade. So then I looked around, and here I am working at the Yellow Brick Road and loving it.
So that's a good point. So it is a trade. It's a profession and a trade, but it's something you have skills in.
Correct.
And mortgages, what do you mean by mortgages is I presume what you mean by mortgages is lending money to consumers, whether it's to buy a home, a residence, an investment, or extending a house or property, or maybe even getting a car loan. Could be something to do with, fitting out your shop. Could be a bulldozer for your property, etc. Just lending money.
Absolutely, and it's pretty much the same lending money to a large corporate, to lending to a consumer, lending for a house, lending for a car. It's all about income and security, and it's just applying those different ways of analysing the different credits and presenting it to the right banks. I was quite lucky. In 30 years, I worked in the business bank, the retail bank, the private bank. Then I ran the businesses, so I had some business ownership or running experience as well as physically writing the loans. So all that combined, taking it to the role I've got now, has been fantastic.
And what about you, Mel? You're at St George and Westpac. What were your roles there, and what was it like for you to make a change?
Yeah, so similar to Dion, I started out with St George as a bank manager, and then after the merge, moved across to Westpac in a similar role, in a bank manager role in the Westpac business. And then from there, worked in a couple of different areas in digital and compliance, and then finished up in the lending space as a BDM for first-party mortgages with Dion. So we started that business in.
Oh, you worked together?
Yeah, I actually reported to Dion.
Really?
Yeah,
that was it. I'm still his boss.
You think so? But so we started the business development for first-party across New South Wales, and then with its success, we went national, and I think ended up with about 12 or 13 BDMs across the country, and I think collectively as a team we'll bring in about $1.2 billion in new business a year as a team. So just tapping into referrers, local professionals in local areas, real estate agents, accountants, solicitors,
Brokers?
No, not brokers. So we were strictly first party.
Right.
So we didn't deal with that. The third party was a completely different channel. So and the third party had the BDMs, as they do on the banks, that go out and see brokers. But first party didn't have that. So that's what we created. And we I think in the first year we wrote $100 million, and that was a challenge. So when myself and Dion put this up to the state manager at the time, they said, "What's the goal?" And Dion came out with this ridiculous figure of $100 million and put me on the spot.
Nice round number.
And I'm like, shit, how am I going to do this? So, but we did it, which was phenomenal, and that obviously was a platform for us to grow that business nationally across the corporation, and we did. It was really good.
So why did you guys leave the bank? That safe, comfortable, massive institution that sort of probably, had plenty of support around you. Why did you leave?
There are two parts for me. One was, like Dion, I got offered a redundancy, which was great. But I think for me, in my head, I had an expiry date working for someone. there was a lot of white noise in the bank. A lot of meetings for the sake of meetings, a lot of reporting for the sake of reporting, a lot of things that didn't add value to our customer, and that frustrated me. So, when both myself and Dion were offered a redundancy, it was an opportunity for us to do our own thing. And we said, let's go out and do what we love doing, do it for ourselves, and get rid of all the bullshit that comes along with the corporate world. So, so two parts. Obviously, the redundancy was the big enabler. But it's funny, I actually wasn't offered redundancy when I made the decision to go into business. So Dion got made redundant first. So the redundancies happened in layers, right? So it had Dion's layer, and then Dion said, mate, do you want to do something together? I said, yeah, absolutely. So I was going to resign, and this was around November.
We had already started the company before
we started the company. So it was funny, my wife got made redundant at Flight Centre during COVID. So Dion and my wife actually opened up the company. So I was fully committed and I was still employed. And then the redundancies came down to my level. So I was fortunate enough to get the redundancy, but I was leaving anyway because I'm like, I've had enough of the corporate world. I want to do my own thing. I don't want to be, I don't want to be, restricted with, my time and spending time on things that I didn't see value, adding value to our customers.
And it happens all the time. Banks go through restructures all the time. And I think a lot of banks are going through restructures as we sit today. And they just reduce staff and, 2 roles into 1 role, 2 branches into 1 branch and those sort of things. And you've got to sit back and look and see, do I want to stay in that role or is this my opportunity to do something different? So for me, it was the turning point. It was my opportunity to do something different. So I didn't really apply for the role that came up, the 2 to 1. And we came out and had a bit of a chat and sat down and said, yep, this is what we want to do.
So how important is, when you leave an institution like a bank, how important is it for you to somehow secure your cash flow? I mean, you guys are able to because you've got redundancies. In other words, you've got a payment to see you out for a period of time whilst you set this business up and, start to get a bit of cash flow coming through the business because there's lag periods in these things. How important was that to you? I mean, is that a big deal?
Look, it is. And, we've actually got some people working with us at the moment that were made redundant. What they did, they spent all their money and then started looking for a job. Rather than what we did, we got our money and directly looked for a job straight away, day one. So we invested our money in ourselves and our business. So that's probably really important. If you get the opportunity with the redundancy, use the money wisely. Go in on holiday, but still keep some money aside and use it wisely. But if you're planning to move from a large corporate to, self-employed, you've really got to plan ahead. Get some cash flow behind you, get some equity out, do something to make sure that you cover that 3 or 4 months to build that pipeline before the money starts running in.
Okay, so when you are sitting there and you're either been offered a voluntary redundancy or you've been made redundant, what's the conversation and who with first? I mean, was the first conversation with Mel? Was it with your wife and your family? I mean, and how did that conversation go? What did you do? Did you just sit down and say to your family, look, I've made a plan with Mel, this is what we're going to do? Or did you just say, listen, I've been made redundant or I've taken a VR, this is what I'd like to do? How did you go about it?
Yeah, it was interesting. So the first thing, Westpac where I was got a really cool calculator. It's got to find it in the dark web of the intranet, but when you do find it, it's got this redundancy calculator. So you plug your numbers in, you work out how much money you've got. And then I went to my wife and I said, can I buy a Mustang? She said, if you get redundancy, you can buy a Mustang. So, it was made up in my mind. And then I spoke to Mel because then you've got to have a plan. So I spoke to Mel, I spoke to, Mortgage Choice, Yellow Brick Road, Aussie Home. I spoke to everybody to work out what my next move was going to be. But I wanted to make sure I had something to go into because I can't sit around doing nothing. So it was first find out the money, talk to your wife and family, talk to any business parties wanting to get involved, and then find the right opportunity to move into.
And what about you, Mel? What was your process like?
Me and Dion worked pretty close together. We had a really good relationship and we travelled around the state a lot, in our roles. And, we would often have conversations about doing something on our own prior to the redundancies happening. So once that happened for Dion, I knew that it was my time. Like, I had to make a choice. And it wasn't an easy choice because, I've got a mortgage, kids, family. My wife had just been made redundant as well. So I was taking a massive risk financially. And this was before I found out about my redundancy. The redundancy thing for me was just a bonus, right? But, I was fortunate enough, I was financially secure enough to be able to do, 12 months without an income. And that's what I expected, and that's what I planned for, to set up a business and say, okay, look, we can survive 12 months, we can, meet all our financial commitments while we get this business up and running. But it got to the point where there was that much change happening in the bank that I just knew it was my time. That was my expiry date. And I didn't want to be caught up in that corporate political, realm any longer. So it was my chance.
And you're probably right. I mean, you do have a use by date, or corporations do have use by dates relative to us as individuals. Some of us are born to run our own business and look after our own business and our family and our staff and our customers. Some of us are born for that thing, and others, not so. But generally speaking, if you are born for that, then you should be looking for the opportunities when they become available. And as Dion just said, you don't wait to the last minute, and say, oh great, I've got this redundancy, I'm going to go take a holiday for a year or two, and do all the things I've never been able to do, because it's not time to retire. Redundancy doesn't mean it's time to retire. It just means some money in my pocket. Now it's time to get on my bike and start pedaling and do something with it, turn it into something, and that's really important. You guys looked at all the various franchise mortgage broker style franchises available. You chose Yellow Brick Road, which I'm very thankful for. Tell me about the next step. So you had to choose an area, a place where you're going to put up your shingle.
Absolutely. Well,
how'd that work?
A couple of things happened. So Mel, we're two different people, and again, if you're going to go into business, it's always good to go into business with someone totally different to yourself. Okay, so I can run a business. I'm very financial. I can get into the detail. And Mel has just got networks. He's a business developer. He hates the detail. He wouldn't even know how much money we've got in the account. That sort of stuff.
That's true.
That's how different we are. So I knew that Mel had a lot of connections in the area we're in, and I knew they're building a massive big airport in a particular area in Sydney. So I thought there's got to be something good happening around that airport. And when I drove out there, and Mel and I sat down and we drove around for a while, and we just looked at all the land just being developed and opened up, we thought, this is where we have to be. This is the opportunity of a lifetime.
That's being Leppington.
Leppington,
near
that's
Badgerys
right.
Creek.
Near Badgerys Creek in the new airport area, which is phenomenal. It's been fantastic for us.
So you got excited about the opportunity to choose your own area, and which Leppington's turned to be pretty bloody good for you guys. And you obviously have the one at Edmondson Park as well. So they're both similar sort of environments in similar areas. In terms of you choose the area, in terms of the commitment to rent space and then start to run a business. It's one thing to be good at selling mortgages. It's another thing completely to be good at being in the business of selling mortgages. That's a big difference. How did you go about finding premises? That's always hard.
Well, premises came down to Mel's connections in the area.
Which means what?
So a lot of the developers and local landholders I've got relationships with. So I live out in the area. I live in Oran Park, and so over the years I've formed a lot of connections, and it just so happens that one of the connections I have own a shopping centre in Leppington, and it was actually the last available shop in this new shopping centre that was available, and I was fortunate enough to be able to make a phone call and say, hey, this is what we want to do. I think there was going to be a phone repair shop going in there, but once I made the call and said, look, this is what we want to put in there, they were so open to it, because they really felt like the area needed that. Given that these people are also developers and cutting up land and selling blocks and that type of stuff. The need for a finance broker in that centre was definitely needed, more so than a phone repairer.
So if you didn't know the dude, and I don't know what happened at Edmondson Park, for example, but if you didn't know the owner of the shopping centre, etc., what would you say to somebody else in your shoes today? What would you say to them? How would you go about it, finding a space?
Yeah. So, look, it is the most important thing, I think, making that transition into going into business, is where are you going to set up and how are you going to set up. one thing that we looked at, like Dion said, was we looked at what does the next 5 or 10 years look like for that local area. And even if even if you're looking at going into a developed area, that's fine. But know your customer, right? Know what your target's going to be. Know what your strategy's going to be. Our strategy was, there's a lot of new subdivisions happening, so we want to tap into development funding. We want to tap into new purchases and all that type of stuff. If we were going to set up in a more developed area, in the west or somewhere like that where it's it's established. Well, then you've got to have a strategy of, do you know a lot of real estate agents that have, that deal with a lot of property owners? Do you know conveyancers that deal with a lot of property owners and those property transactions? Because what you've got to do then is you actually got to try and take the business from other banks or other lenders and give better service and give better rates. That has to be a strategy. Our strategy aligned with our area with that development piece.
What about in terms of the actual premises, though? Like
the actual, yeah.
How would you find premises today if you didn't know the local owner of the building or a real estate agent?
I think it's you got to find the area you want to work in, where the opportunity is, where you've got your connections, as Mel said, and then it's just hitting the streets and finding the right spots.
So it's literally that.
Absolutely. So with Edmondson Park, we knew there was a new shopping centre there. One of our people that work with us had dinner there one night and said, "You got to go to Edmondson Park and have a look." So we just had a look, and again there was one shop left. So we thought it's a great opportunity. We spoke to Nat, who lives just up the road, and it all just fell into place and made sense. So it was a great location for her. Her childcare centre's upstairs from the shop,
where her kids
goes, and we got a great business partner in a great little area that's growing.
So once you made a decision which franchise brand to go with, the second thing is you found the premises. You got a bit of cash. You guys are fortunate enough to have a redundancy. You got a bit of cash to see you through. What do you reckon you need? Do you reckon you need access to cash, maybe say for 1 year's base wage? I mean, what are we looking at here? Do you reckon you need 12 months worth of cash flow?
Yeah, look, it depends on your level of experience. Like Mel and I we're pretty experienced, and our business partner Natalie, she's very experienced. So if you've got a group of customers you can talk to straight away, it doesn't take too long to start up. If you don't have any mortgage experience and you don't have a large connection of people to talk to, then it's going to take longer. Okay, so it's probably 3 to 6 months minimum, but 12 months maximum, depending on your experience and your connections you have. Building the shop does cost a bit of money. It costs, $150,000. So you've got to have that. And then you probably got to have
fit out. That's
cost. The fit out cost.
So did you spend that in cash, or did you go and borrow that?
We're lucky to have the cash.
Yeah, but you can borrow it.
You can borrow it.
Absolutely. Yeah. You come and see us, and we'll lend you the money.
No, but that is the case. And
That's
learn
it.
how it's done, because then you can do it again for your other customers.
Correct.
They can do it again for the other customers, but you can get an FF&E, like, we have that product at Yellow Brick Road.
Yep.
Which you guys sell a lot of. You can get that financed, but you've
Correct.
got to. Did you guys sit down and go, okay, here's our cash flow forecast. This is how much rent we've got to pay every month. Yep. This is, we've got a receptionist, or this is the receptionist cost. This is how much we need to draw ourselves, just to pay for whatever we need to pay for. Did you go through that process?
Absolutely.
An actual budget?
Yep, and we still do that every month. We go through our budget every single month and look at what's coming in, because the business is fantastic, because it does take a little bit of time for the money to come in, because you settle a loan, say in month 1, you don't get paid till month 3. But you know exactly what you're going to get in month 3, and then month 4, month 5, so you can budget really, really well in this type of business once you start getting going. And then you can forecast your costs, so you're really well ahead of exactly where the money and the cash flow is going to be. So we're very tight. Well, I am, and I talk to Mel and let him know all about it. But we manage that very tightly. But we started with a budget, and we exceeded our budget when we started.
So okay, so that's important part. Cost one thing, but bringing the revenue in is about finding customers. How easy is it to find customers? You can only talk for Leppington and Edmondson Park, I guess, but how hard or easy is it to do it?
So it's funny, right? I was in business development at Westpac, and my job was to find people that would refer their customers to Westpac. And don't get me wrong, we did very well.
Like lawyers or accountants or real estate agents.
Correct, real estate agents, all that type of stuff, right? To refer their clients to us to say, hey, got a relationship with this dude at Westpac, give me a
set you up.
And we did very well. But one thing that I found going in to Yellow Brick Road and being self-employed, I had a whole network of friends and people from the past, like people I went to high school with, that over the years they knew I was at Westpac, but they never came to me. As soon as you're self-employed, it's like it's the mentality of back the battler. You know what I mean? And people started coming to us because they heard we're in business on it.
How do they hear? What did you tell them? How'd you get
So,
that
you know,
information
it was
out?
a Facebook post to say, 15 years at Westpac, thank you for everything. And,
Usually LinkedIn.
Yeah, LinkedIn. I got thousands of views on my LinkedIn and lots of business from it. It was amazing.
Yeah. So, you just sort of spruik it as you would naturally. And the stuff that came from it, people that came to me that I would never have expected to come to me. Like I said, people as back as, 20, 25 years ago back in high school, ringing me, on a weekly basis, different people, and it's like just a blast from the past. And, they're like, maybe you can help me now. And there's also a whole heap of people that at Westpac with this one set of policies that we had to work within, there was a lot of people that I couldn't help, but now we can. So, that's also, so there's just been a natural thing as well now. I think the perception that brokers do have more options than going to one bank.
One lender. Well, maybe you could just explain a little bit of that, because brokers have the option of all the lenders they have on the panel, which in Yellow Brick Road's got all the same lenders as Aussie and Mortgage Choice, etc. We've got lots of people on that panel, lenders that is. But the significance of your point is that one lender, let's say for example Westpac, I'm not picking on Westpac, Westpac might have a view on certain credit criteria that for this month, for the next 6 months, they don't want to lend to. You're a customer and you think your normal banking transactions over with Westpac, go along to Westpac and they say, no, we don't want to do the deal. Whereas they come along to you, the broker, you've got the other 29 lenders and you know their credit conditions and you know what their appetite is. And that's what you're talking about here. It's understanding the appetite, I guess, of all the lenders. So what I want to ask you guys is, how hard is it to get your head around that? Like, how do you work out what the appetite of all the other lenders are? Was there a learning curve involved in this?
Look, there was a learning curve, and going from one policy to 50 policies is a bit daunting. We sat down early on and we built this bank matrix, which we still update today. So we've got all the banks, all their key niches, and it's all in a matrix. You can look it up. So if you need to find a bank that has a common debt reducer, you click it up the top, the 4 banks come up. So we've built that as we've gone, but it was a lot of learning along the way. But the BDMs are amazing. The business development managers of the banks are your Bible. You ring them up, and they're really, really good. You get treated really, really well as a broker, I can tell you, compared to a lender in a bank.
Can you maybe you could explain why the BDMs of the various lenders, which you were sort of one, but you're going to first parties, but nonetheless, BDM is BDM. Why are the BDMs of the banks so keen to help?
Well, obviously they get their bonuses and payments are paid on the amounts of loans they draw. So they work with the guys that understand what they're doing and can bring in volume to them, to their books and that sort of stuff. So they're all fighting to compete for your customers.
Correct.
That's it.
They want your business.
They want our business, our customers' business.
So all of a sudden you're on the other side of the transaction.
Correct.
How good does it feel as to be on the other side of the transaction?
Oh, mate.
Before you used to be on the bank side, you're begging someone to give me the business.
Correct.
Now you're standing on the other side.
Yeah. We get a bank every single Monday in our office giving us an update of what they're doing and asking. A different bank. Asking for business. We get taken to lunch. We could get taken to lunch every day. We turn down way more lunches than we can actually go to because we just don't have the time. You get treated really well. They're really trying to help you. But when you pick up the phone, they answer and they're helping you. And they're really, really, and that's got us through that first 6 months of, what does this bank do? We just rang the BDMs. They said yes or no pretty quickly, or they helped you out and sort out a transaction for you.
So I actually never lent money before I started Yellow Brick Road. Never written a loan in my life. So it was daunting. But, just to tack on what Dion said, the BDMs are your lifeline, right? You ring them up and it's just about relationships. You run a scenario by them and you say, hey, this is the transaction I've got. Does it fall into, your policy? And pretty quickly, you'll figure it out after a couple of phone calls and, after doing a couple of similar deals, you figure out where things belong and what appetite different banks have for different types of deals. I also think going back to, why do the BDMs, treat us so well and that type of stuff, mate, brokers write 70% of the lending.
Yeah.
If the banks didn't look after us, they're missing out. People now want choice. Loyalty, as it used to be back in the day, I think is changing now, and people really, they've got access online to different options, and if they can save $50 a week in interest, loyalty comes second, because
Totally.
it's what you put on the
You're
table.
loyal to your family at the end of the day.
That's exactly right.
That's it.
So, and I think this is where the broker space is really important, where, we're advocating for the client. We're looking to put them in the best position. And the banks need us to be that distribution arm.
It's quite a powerful position, to be frank with you, relative to where you were, because you're on the other side of the transaction. If I was to ask you guys, how do you rate yourselves or rank yourselves today relative to how you were feeling when you were working in the banking system and having made the leap of faith, in this case to join Yellow Brick Road? But how do you feel? Do you, well, maybe I'll ask you to rate Mel, and I'm going to ask Mel, do you rate Dion? I mean, how do you think Mel is today compared to what he was like when he was working at the bank?
Oh, he's he was always motivated, but he's stepped it up a notch. When you've got no money coming in, you don't have a base salary, you tend to work pretty hard. And Mel's running around getting a lot of business in. In the early days, we had to put our phones down and turn our phones off. We had that much business coming in from all the talking and social media we were doing. And Mel did actually, he stepped it up massively.
And do you reckon he's in a much better place?
Oh, absolutely. Absolutely. He wasn't fit for a major bank. He's fit for his own business, and he's running it really well. He's like the class clown, and he keeps it all interesting. It's
enjoying it? Do you think he's having fun?
He's having a great time.
What are you reading about this bloke over here?
Yeah, so similar. Again, I'll go back to what I said about, the white noise and the meeting for meeting's sake and all that type of stuff. I see Dion now doing what Dion loves and not wasting time on stuff that doesn't mean anything. So Dion is more productive in leading our business, because we don't have to say, to each of our brokers, how many bloody letterbox drops did you do, or how many phone calls did you make. It's not about that. For us, it's about real results. It's about, your input, your output. And the reality is, as a broker, to be successful, you may only need to do one loan a week, right, to be paid equivalent to what you were at a major bank. And that's what we manage to, because we are about having a really good work-life balance. And I think we've both achieved that, being self-employed, where, we've both got our hobby farms that we go to, and, we'll work there 1 week a month, and we've got that flexibility now to do what we want to do while we still run our business. And I think, for Dion as well, on a personal level, unfortunately Dion's father passed away last year, and there was a lead up to that. And Dion took time out of the business, and I said to Dion, mate, you're not going to get this time back. Get up there with your dad. Be by his side. And I don't know that he would have had that opportunity if he was still with a major bank. And for me, the best thing that I did, and I'll sometimes get emotional about it, because that's the shit that matters, right? And I wanted to be there for him and hold the reins while he spent time doing what was important, and that was spending, his dad's last moments. So, mate, I would like to think that Dion loves what he's doing.
Absolutely.
I love what I do, and this is the shit that gives me goosebumps, is helping people, and really helping people. Not just saying you're helping people, but really doing it.
And what's interesting for me is this is the first time Yellow Brick Road's had two guys coming out of the banking system, two, relatively speaking, senior guys coming out of the banking system, and good banks, Westpac and St George. And within a very short period, it's only been a couple of years, and bear in mind, you guys set up in the middle of COVID. You now got two branches, two separate branches. You're actually shooting to the top of our leaderboard in most categories, whether it's commercial lending, car leasing, residential home loans, commercial loans. You guys are shot up to the top of the leaderboard, particularly in the earlier, the former ones I just said, particularly commercial, because it's the first time in Yellow Brick Road and VOW's history, our group history, that a YBR branch has actually won the commercial lender of the year, which was this year. You guys, congratulations. And it just goes to show you what happens when, because banks give you good training. I mean, you learn good stuff in banking environments. So, but to be able to bring that into the private sector and then run your own business off the back of the skills you learned in those environments, not only gives you a better lifestyle or work-life balance, as you just said, Mel, and choices, but actually you can do very well at it too in a financial sense, but also a sense of achievement. If I asked you two guys, just to finalise this off, what would you say to anybody who might be sitting there right now thinking to themselves, wow, I've got to make a call here. Do I take VR, voluntary redundancy, or I'll be made redundant, or I'm about to be made redundant, or I've just had enough? What would you say to them in terms of perhaps joining a franchise like YBR to run their own lending business? What would you say?
I'd say go for it. I would say, make sure you're set up financially, have a chat to someone in the business. The first thing I did is I actually refinanced my loan through a YBR person. YBR franchise, Effie at Elwood. I did, just to see the system and see how it worked. And I love the system. I can tell you the system we've got in YBR is 10 times better than the system I left at Westpac. It is simple, it is customer-centric, not bank-centric, and it is a joy to work with. So I think if you're in that period where you're thinking, what's my next move, definitely consider a YBR franchise. Come and talk to us, come and talk to another franchisee and see if it fits.
Mel?
Look, I think my advice would be you got to back yourself, right?
Yeah, back yourself, that's important.
You got to back yourself. And, one thing, it might sound cliche, corny, whatever, but, nothing great ever happened from sitting on your hands. And, you don't achieve anything unless you do something different to what, the person before you did. It's not easy. It's not easy. But if you back yourself, you'll be successful.
It's extremely rewarding.
And it's rewarding. And the thing, you're not driven by someone telling you you have to do this, you have to do that. You're driven by, I want to do this and I want to do that and I want to help this person. It's a completely different mindset. Like, I honestly don't feel like I've worked a day for the last 2 years. And I say that to Dion, quite regularly. It doesn't feel like work. To me, it feels like it's part of my day. It's what I do. I talk to people, I help people, and that's it. And that's what, like I said, that's what gives me the goosebumps.
I think another thing to consider is maybe starting with a partner as well. I can tell you, when you go into it by yourself, it can get a little bit lonely. You have a lot of BDMs to talk to and those sort of things, but going in together, it's you can bounce ideas. You've got especially if you're two different people. Someone bringing business in, someone writing business to start with, and you start to develop yourselves as well. That makes it work quicker, and it makes it easier.
I'd be very happy for Yellow Brick Road to actually go in partnership with anyone who's thinking about this ourselves, and perhaps you guys might want to join in the partnership as well, because you've done it.
Yep.
I mean, and you know how bankers think. So if there's anyone out there who's interested in this, not only go and talk to Mel and Dion, but come into the office. We might be able to help you with the cash flow if you didn't get a redundancy payment. I'm sure there's, we can all somehow go into the business together. Make sure you've got enough share, the individual does it, and make sure you've got enough cash flow. Make sure you've got enough experience coming from people who've done this before, especially coming out of bank environments. And for us, by the way, there's no restrictions. The more the merrier. Mel,
Absolutely.
Dion, great to see you guys.
Good to see you too, Mark.
Good to see you too, mate.